All right, it's gonna be a real quick, very sweet and right to the point market review. And I try to keep it short. Um, that way, it's just right to the brass tacks of things. Yeah. So we've had 3 consecutive down close months. I wanted to see some resistance be met at this monthly bearish order block. We have not done that. We've pretty much obliterated it. Yet to see a new high, but we're looking at 16,261 as the draw on liquidity. Right now, we're about 150 handles away from that, but still a lot of time left to reach there during this month. Um, that's in the Nasdaq. As for ES, we are kind of at that same level. Um, I'm now no longer really concerned about this inversion fair value gap. I wanted to see it hold price at bay. It has not done that so far. So we're just going to no longer look at that inefficiency as it is now completely balanced. Came up and came back down to fill those specks in the paint. Think of the paint roller analogy. When you're painting a wall, you're coming up and you're painting the wall, you're getting most of it, but then your roller runs out of paint and so it's going to leave specks, and so you have to come back down to fill that. And now it's been filled. We reach for sell side liquidity beneath this candle right here. Boop, took that out, and now we've been expanding up. In order, what I wanted to see, and you can go back in my past market reviews and when I called this, is I want to see price go past this tail consequent encroachment at 41.67 and a quarter, and then drop past this candle's low. But we failed to do that this month, and you can see how we've been expanding. So 9 days left, lots of time, but ultimately looking like we're gonna run to this high over here in Nasdaq at 16,261. In ES, I'm very interested to see how we trade here. We have the order block, monthly bearish order block right here at 45.35 and a quarter. Right now we're about 30 handles above that, so we'll see where we at. Well, tongue twister, my bad. We will see where we are at on a closing basis at the end of this month. So dropping down to our weekly chart. Uh, let's go back to the monthly so you can see. This is what we're looking at. No longer concerned with that. But yeah, this is August's lows candle, and this is the price that we're looking at. So now we're dropping down to a weekly and looking at that price just on a smaller time frame. Same data, just more detail. And it's always just more and more detail on what happens during that time versus just one huge candle. You get it? So we have this weekly SIBI right here, I mean, imbalance, came back up to about consequent encroachment of that level, which is just the midpoint of this little range. And then we run down, find support, and take out this candle's low right here. That's the month of May's low. Color outside of it just a little bit. However, look at where the body closes. Reach back up, paint the rest of this candles, or what, the rest of this SIBI, of this imbalance, not a candle. And so this is, we've had 1, 2, 3, almost 4. I'm going to get into what this candle means right here, but 3 weeks of consecutive upside delivery, we're bound to see a retracement at some point. Where is that retracement likely to happen? Well, I'm looking at this candle's high up here. It is not the orange line, it's just about 1 tick above it. You're looking at this H number right here. It's at 45.97 and a half. So just 1 tick above this candle's high, which is a small SIBI with a bearish order block right before it. High probability in terms of going short in that area. As you can see, we ran away from it at first, came back into that, and then sharply declined. And so I'm looking for a raid on these relative equal highs right here. So I'll put in this little green line. I'll say relative equal highs. Put it on the left right here, and then we'll push it up one. And there we go. but it's also a little imbalance. So I'm looking at this range from this little 10 handle range exactly from 46.05 and a quarter to 45.95 and a quarter. Okay. And then in NASDAQ right now, this tail, I'm watching that 16.087. You see how at first we're respecting that, but right now we're coloring outside of that. The high we took out today was this high right here, I believe. Yeah, 16.112 and a quarter. We just purged that. And so this candle's high comes in a little bit higher. And depending on how we trade this week, determines whether or not we're likely to draw here. Gun to my head, if I had to call it out, I do believe that we're going to take out this candle's high before a retracement. But don't take my word for it, and do not take any trades without your own understanding first. Bueno, bueno. All right, dropping into our daily un momento. I'm gonna point out all of this. So there's Civi right here, another one from right here to here. So that's an inefficiency. And this is the potential inefficiency. So like this entire range right here from 15,837 and a half to 14,950, we're gonna have a retracement into it. Are we gonna take out this low here? Maybe, maybe not, but there is gonna be some sort of retracement. You can see how from this high to this low, there's always some sort of retracement before expansion lower, retracement, expansion lower. Right here, we're just super overbought, and we don't need an indicator to tell us that. We had four, man, not technically, but it looks like 4 consecutive weeks of upside delivery. Now today was Monday's price action. What does that mean? There's still 4 days left to see how this candle paints. What we could have done was just reached up, taken out this high, and now we could deliver to the downside and make this a down close candle. But right now it's white. And so price has to trade below 15,891 and a quarter for that to happen. We'll mark it in white right here. We're about 100 handles away from it, 120 about ish. And that's nothing in the NASDAQ. This thing can, move in the span of a day. And we'll get into that right now. I'm going to take these 5 buttons off because they're just kind of distracting. All right, yeah. Getting into, the new charts, I would say. Uh, this high right here in July 31st is this candle right here. Just look at the day at the bottom right here. You can see how, boom, that's the start of the week. Monday, July 31st. We have an up close candle on Monday and still 4 days left in that week. So, boom. So, the rest of the week, we create our high of the week. That's the power three. That's accumulation, the manipulation to take out these relative equal highs right here, and then the distribution. Below old lows into inefficiencies. Where just about the consequent encroachment level of that. Boom. And so this little segment between these two white lines, I'm going to take out this one because it's just a distraction. These two white lines, everything that happens here is one weekly candle. Why? It's 5 daily candles, which makes a weekly candle. Much like how there's 4 15-minute candles in a hourly candle because, 15 plus 15 is 30. Add two more 15s, and now you have 60. There's 60 minutes in an hour. That concept. And so this is the time and price continuum. This is what I'll always refer back to you. That way you do not get lost in your smaller time frames and where we're at in price. Because it's easy to forget and you need to understand your higher time frames and what number you're at and what you're looking for as you drop into your lower ones. All right. So back to what I was saying, we have our high of the week made. Right now, we have Monday's high right here. We had the open, traded lower, accumulation and the manipulation, and then the run higher, and then a retracement back into that range. That's where that model 22. So you see in the Discord I posted, model 22. Here, I'll bring it up. Right here, this higher time frame buy side liquidity pool at 16,112 and a quarter. That's this high right here. Watch the number in green that comes up right here in light green or in white. 16,112 and a quarter. That's what I was watching. As soon as we took out that high, then I go into my smaller time frames to go find model 22. See how I'm on a 1 minute chart, but I'm really looking at where price is at on the 15-minute right here. So on the 15-minute chart, I can gauge Monday's opening price, which is right here at the new week opening gap, because that's Friday's closing price at the bottom and Monday's opening price right here. And so everything below this black line on top at 15,891 and a quarter, remember 15,891 and a quarter, everything below that is a bearish candle on the weekly and daily for Monday. And so just in the 15-minute chart, there is no daily candlestick here, but using the 15-minute chart, we can gauge where we're at on that daily candle. I hope that made sense to you. If not, it's all good. We can refer back to that time and time again. But what I'm trying to convey to you right now is huge in terms of understanding the narrative and where you're at on your map. It's basically like your legend telling you where you're at. Because when we drop into, these 1 minute charts and we just see this small segment of price here, if you don't have two screens, it's going to be very hard for you to understand where it's at. And that's why, I'm saying go buy that Black Friday deal for TradingView so you can have the ability to do this. Because if I'm just looking at this small segment, uh, this is it. I don't even know where we're at. I mean, this range is from 16,118 to what 16,074. Like that's not even 100 handles. We're working with thousands of handles here, and so it's huge. It's huge. Go and get it. At the time of this screenshot recording, or yeah, screenshot, uh, what I'm looking for is just a retracement into that entire candle's range. And so, we have higher time frame liquidity being purged at 16,112 and a quarter. That's this candle's high right here. This candle's high. A breakdown, failure to make a new high, market structure shift, takes out both these lows right here. These are both short-term lows. When price trades back into that fair value gap, you can go short, targeting a retracement of the entire daily candles range. So notice how we open at 15,891 and a quarter, but just this little sell side liquidity pool that's right here is at 16,089. That's over 100 handles. And so even if price does trade below this, we're still have a bullish Monday candle. All right. Same thing in ES. We took out September 15th high. Not quite at July's high, which was all the way back here. Yeah, we peaked in July and then failed to make a new one in ES. But yeah, no longer concerned with this daily inversion fair value gap. Here's our weekly SIBI. You can see how we obliterated that. Took out last week's high. Exploded through it, not just a purge. And so that's kind of wary. I need to see some downside delivery on Tuesday or Wednesday if we want to resume bearish ideas. You know, if we just see this as a purge on liquidity versus an explosion through it. So you see how like this candle's high takes out the previous day's high and then, you know, delivers to the downside versus how this candle takes out this high but explodes through it, body closes over it and everything. That's what I'm kind of watching for right here. And so on Tuesday, we've already made a higher high than yesterday on Monday's candle. It's technically still Monday, but the start of your Tuesday candle begins at 6 o'clock Eastern, Eastern Standard Time. Kind of like how Monday's price or Monday's candle starts at Sunday at 6 Eastern Standard Time. So no different. But all right, let's get into the brass tacks of everything. So let's get rid of these. So NASDAQ up here, we're looking at the daily chart. This is everything I've just spelled out to you. Here, there you go. There's 16, 12 and a quarter. I'm gonna scroll back because this is the 1 minute chart. Here's model 22 when it happened. So we purge it, come down, drop back up. Bearish order block doesn't go past the mean threshold or the midpoint of that range. So that's 16,114. This candle's high comes in at 16,113 and 3/4. Just one tick off. Can't get much more precise than that. Delivers down, creates a fair value gap right here. You can see how price ran away at first, and that might scare new traders, you know, oh man, I should have just gotten in right here and fuck, because it's running, blah, blah, blah. That's incorrect. That's wrong. You need to fix that very quickly. You can see how price trades back into it at 3:26 p.m. This candle, what does it do? It wicks into this little fair value gap as well, right into the consequent encroachment. Look at that dotted line and that candle's. All right, so look at that black line or the black level on the right, that price that says 16,108 and a quarter. That's the midpoint of that, I believe. Go to this candle's high, looking at this number, 16,108 and 3/4. That is algorithmic. You can't make that up. Closes underneath, delivers down. I wanted to see it make a new low right here. However, smart money came back up to accumulate their orders. Price goes to about the consequent encroachment of this wick right here. So from this candle's high to the close, just the measuring that wick, it comes in at 16,107 and 3/4, I believe. Yeah, 16,107 and 3/4. This candle's high, 16,107 and 3/4. Very high probability, the way we respected that right there. And as you can see, we close outside of it. And as soon as we close outside of it, we never have another body close inside of this model 22 fair value gap. We had consecutive down close candles constituting this candle's low as a bearish order block. You can see how this last up close candle right here touches 16,105, the low end of this fair value gap. This candle's high comes in at 16,105. Trade and close beneath it, come back up, touch it. I think we fall just short of it actually. What's this candle's open? 16,102 and a half. This candle's high, 16,102 and a quarter. So yeah, we just barely failed to reach it. There is a little fair value gap right in between there, so that's what we reach for right here before delivering to our sell side liquidity pool right here at 16,089 and a quarter. So that's what this is what that looks like live as it's happening, called out before it happens. All right. I know if I talk about this, I'm gonna go down a rabbit hole, and I really wanted to keep this short, but fuck it, I don't care. You guys, this is what you guys are paying for. This is what you're gonna get from me, you know. So when I see this, you're basically time traveling. What do you mean, Zach? What's time traveling? How do you time travel in the markets? Well, at the time of my entry, and if you know this model too, you would have entered on this exact candle. You're going to be just like me, I promise. At 326, we get in. Our target is right here. From that time and where we're at in price, 16,105, because that's where you enter at the low end of the range, worst case scenario, you're anticipating how fast and how long it's going to take for price to run to your objective. So, how many 1 minute candles will it take for me to get there? How long am I going to spend in this trade? Well, usually these trades are very quick for me. They last anywhere from 3 to 30 minutes. It's within an hour, I'll tell you that much. In this trade, I got in at 326, and I'm expecting price to reach here before 4 o'clock. Why 4 o'clock, Zach? Because this is when equities open. That's when the window of volatility and high probability time frames, or time zones, I should say, not time frames, because this is a time frame. This is a time zone. The zone of time that we're in are increased. You can see how everything past 4 o'clock, small little movement, nothing that really jumps out, right? Except for, at the end right here when price opens back up at 6 o'clock, the start of your Tuesday candle. But the rest of Monday is just choppy. And so I want to see us reach into that area before 4 o'clock. For my time of entry at 326, I knew I have 34 minutes for price to get to my objective. Now it does happen before. What time is that? 350. So what? 24 minutes spent in that trade. That's my time frame. There it is right there. That's all it was. 24 minutes for just about 15 handles. Yeah. However, none of this data appeared when it was 326. Does that kind of click with you? Because at 326, I'm anticipating price to run down here before a certain time. And that's depicted here, how it reaches at 350 when I allotted for 4 o'clock to be permissible. Now, what I just said to you is actually a lot bigger than you believe, or that you're taking in right now. But if you come back to this video in time, keep putting in work, keep understanding the language, keep improving, you'll be like, holy shit, how did I miss that? Holy crap, what he just said was exactly what I needed to hear. With the times I need to be looking for, and when each candle closes and opens and the allotted time for price to trade during that time. It's going to fly over the top of your heads at first. Why? Because you want to go in here and find the thing that's going to make you money real, real fast. And you can't do that. Um, I can't sugarcoat this to you in any way, but you're going to have to fucking work for this shit. You're going to have to go put in some work and see why it is that this model presents itself and leads to the outcome. I gave you the logic for model 22 right here. A huge expansion day. If we would have closed up here, that would have had a candle closure where it's at the very top of the range. Where in any of these candles does price close where it's either at the highest or lowest? I don't know about you, but I don't see one where it closes at the high. And so what we're anticipating is the retracement back of that daily candle. Yeah? Hopefully that makes sense because that's where I am going to end this off on. Um, if you guys have any questions, feel free to hit me up. My private mentorship group, you guys have my number. You know what it is. You know what to do. You know what it is. For those of you watching publicly on YouTube here, you can DM my Instagram at BSU Trading. On IG right here, or email me at this channel's contact link, that the email. It should be linked there somehow, but if anything, just there it is. Um, yeah, that's gonna be it for this video. I hope you guys found something insightful. If you guys did learn something insightful from this, and it doesn't just blow by your brains, or you don't understand anything I'm talking about, um, let me know. You know, leave it in the comments. What does this mean? Add a little time bar to it and like what time during the video it happened, and I'll gladly go through and answer. But until next time, be safe.